We're here. What's good, Jolene?
What's up? Happy February.
Hold up.
Yes. Still coming. A lot of sippage tonight, I see.
Hold up. The smell of grapefruit.
Mm.
You know what it
Actually,
smells
that
like though?
sounds.
Hold on.
Does it smell like conviction?
It smells like conviction, but
What else?
a touch of haterade.
Okay. Yeah, that's that yellow flavor.
Whew. But a touch of victory as well. How are
Hey,
you?
I'm great. How are you doing?
You know, I'm feeling very marvelous. Very marvelous. It's February 1st. It's our
That's
favorite time.
right.
It's our favorite time because we get to hear some gems drop before the actual gems drop. So
Okay.
I'm blessed. You know, a lot of things have come forth. So
Mm-hmm.
you know, cheers, Jolene. Cheers. Shout outs to
Yes.
you for those that didn't know. Shout outs to Jolene for celebrating her wonderful birthday. Am I able to tell your
Yes.
age or is that disrespectful? I just want to make sure that I'm in the
Yo, I am proud of
respectful.
my age, y'all. I am
Yo,
41
there we
as in
go.
WON because I stay winning, okay? 41 out
Well,
here, champions.
blessings. Here's to another year around the sun to you.
Thank you.
And let's get it popping. What's good, everybody? I am Mark Monroe, accompanied by my wonderful co-host, co-producer, co-creator, and all things galactic, and of course, yo, straight winning out here, rocking the leather jacket with the wonderful, one-of-a-kind shades. Give it up for the wonderful.
Totally. Still NGC in the place to be. Happy February, cause of what does it?
Oh man, and shout outs to each and every single one of you for making it through your first month. Yo, y'all did it out here. So let's get some things out of the way. If you haven't subscribed
Okay.
yet, it's very easy. Just hit the subscribe button down below. You know, we totally appreciate you and your existence. And on top of that, go ahead and hit a like button because we would totally appreciate that as well. So that way, essentially, it does some good work for the channel. And on top of that, if you want to be in the know, just like how Valencia was first to the stage here with the Hola, ¿cómo estás? Muy bien.
Oh my God, dice, we live.
Yo, go ahead and hit that bell so that way you can be a part of the notification squad, aka the Cool Kids Club. So, yo, a lot has happened.
Yes.
A lot has been going on. I feel
Mhm.
like this may be an unplugged episode. I'm just kidding. Uh,
Yo, I'm
but
keeping the shades on all night.
I'm
Okay.
I'm gonna try to keep them on, you know, because you know I definitely want to say a few things, but we gonna get into it. So, Jolene, before
Mhm.
we get started and going through all those wonderful pleasantries, yo, go ahead and drop some knowledge on us and some data. What's good? What happened in these markets? Where you know today's day 1 of February too.
Mhm. Mhm. Mhm.
Hmm.
Yo, the Dow mark was up 273.38 points. So now we are currently occupying that 35,405.24 level. Then we have the S&P 500, today was up 30.99 points. We're now at 4,446.54. And the NASDAQ, came through respectful for the 1st of February, up 106.12 points. And now we are back to the 14,346 level. The VIX dropped it low for a little bit to 21.96. And the 10-year Treasury note was closed at 1.797%. Now, if we head on over to sector performance, we'll know that there are 11 sectors, Mark. And We track the top three and the bottom three so we can see what that rotation is looking like. We have energy, materials, and financials holding it down for the top three spots. And then for the bottom three, I don't see technology, yo. We got consumer staples, real estate, and utilities. Now, for our pick performance, if you want to know where the current pick list is, you can go to that come up series on our Instagram page and I scroll through till you find that list. And again, it is subject to change. Get ready because a change is going to come. All right, we have UPS clowning at 14.08 percentage points up. And then we have DraftKings at 7.20%. And then we have C Limited at 5.74%. And I will note for the bottom three, it's Target, Tesla, and Microsoft. However, all these ones were down today by less than a percentage point. We have Target coming in at negative 0.54%, Tesla coming in at 0.58%, and Microsoft coming in at 0.71%. So even just looking at the pick list and the range of performance, you can see that today, people definitely made some money today. If you didn't, I don't even know what to say. All right, so Mark,
yes,
it's February,
yeah,
and I just say they're not a sponsor, but I really do appreciate walking in and being greeted by Black History Month apparel designed by Black designers and business owners. And, I got that little Sojourner Truth, Garrett Morgan, little drip,
Nice.
I appreciate that. I appreciate that from Target. So, yeah, again, it's not sponsored, but I do appreciate that. So I just need to put that on the record. Shout out to Brian Clyett, our historian. We are back. We go from February to Juneteenth with Black history. And this time around for this year, the themes are all about dreaming and thinking big. So we have a couple of quotes here from Booker T. Washington, Maya Angelou, and Harriet Tubman, my girl. So let's start with Booker T. Washington. Success is to be measured not so much by the position that one has reached in life as by the obstacles which he has overcome while trying to succeed. That was Booker T. Washington. This is Maya Angelou. You can only become accomplished at something you love. Don't make money your goal. Instead, pursue the things you love doing and then do them so well that people can't take their eyes off of you.
Can we say that one more time? Because that really resonates.
Yeah. You can only become accomplished at something you love. Don't make money your goal. Instead, pursue the things you love doing and then do them so well that people can't take their eyes off of you.
That's everything.
That is so beautiful. And then we have a quote here by Harriet Tubman. Every great dream begins with a dreamer. Always remember, you have within you the strength, the patience, and the passion to reach for the stars to change the world. Ashe.
Shout outs to Brian, another gentleman who just recently celebrated his birthday also. Yes. So we salute you, King. And on top of that, we are truly, truly thankful for all the wonderful, history that you provide to us and insight. So peace and blessings, brother.
Yes.
All right. So, Jolynn.
Yes.
Where do we begin?
Okay, so there's a lot. So let me just say, we definitely want to go over earnings for Google and AMD because there is a lot of sippage that needs to take place for that. Definitely want to pull up a chart for that. We have some questions, and then there is something extra that you're going to do towards the end. So
facts.
I guess where do you want to start?
Let's just go ahead. Let's just rip the Band-Aid off and start off with the wonderful earnings that took place.
Yes.
And coming in first, I got to give it to him. amazing quarter, and then on top of that, with the surprise that shocked the financial world, you know, let's go ahead and just hit them with that transition. Shout outs to Alphabet in the building for their fourth quarter and fiscal year 2021 results. Now, let's just do a quick little breakdown as it pertains to what took place. From the CFO at Google, or AKA Alphabet, he said, our fourth quarter revenues of $75 billion, up 32% year over year, reflected broad-based strength in advertiser spend and strong consumer online activity, as well as substantial ongoing revenue growth from Google Cloud. Our investments have helped us drive this growth by delivering the services that people and our partners and businesses need. And of course, they continue on the long-term opportunities. We get that little corporate, spiel. All right, so let's get down to the nitty-gritty. So at the end of December 31st, 2021, let's go with we'll just go with the quarter. So $75.3 billion as it pertains to revenue. Again, 32% up quarter over quarter. And of course, operating income was at $21.8 billion. Net income altogether, if we look at it all together, that's $20.6 billion, aka a diluted EPS of 30.69, up from 22.3 where we were in the same quarter last year. All right, so of course, let's just do a quick breakdown as it pertains to where the revenue came from, shall we? So in 2021, we saw that revenue had increased for Google search. So of course, as we start to notice that a lot of folks are starting to put that money into advertisement search, especially now that we're starting to see some of those markets come back. And here's the interesting thing about Google and companies like Google, aka Meta. You can kind of get a good gauge as it pertains to where the market is based upon the spending of many of those corporate partners. So, for example, you can kind of get an understanding if you start seeing that travel spend is also starting to increase, or if the ad spend is starting to increase, and that lets you know that companies are willing to spend more money, which is letting you know that they're starting to rev up and get going. So, coming in, we saw Google search at $43.3 billion. We saw YouTube ads at $8.6 billion and the Google network at $9.3. So, altogether, Google advertising came in at $61.2 billion. And then of course Google Cloud, not to be left out of the totem. We had Google services in total at 69.4, Google Cloud at 5.5 billion, and then of course they have some other bets over there cooking in the fire at 181 million. So something to think about, and as well as hedging gains or losses. Well, it's interesting. In 2020 they actually had a loss of 2 million, but in 2021 they had a huge hedge, which ultimately turned into a gain of about $203 million. So total revenue placed them at $75.3 billion in comparison to last year at the same quarter of $56.8 billion. That is major. Now, of course, they also give you this number as it pertains to the number of employees, which is very interesting. They went from 135,000 to 156,000. So all in all, the company is definitely growing. So of course, when we look at the operating income, we still see some losses here, especially when it comes to the Google Cloud services and some of their other bets which they have cooking in the background. But of course, Google services, still none to be duplicated from it, is still reigning supreme. So that's very much so interesting. But what took the show today was Alphabet today announced that the board of directors had approved and declared a 20-for-1 stock split in the form of a one-time special stock dividend on each share of the company's Class A, Class B, and Class C stock. So the stock split is subject to stockholder approval, so it hasn't been approved yet, but essentially, 9 times out of 10 it probably will. So again, that's going to have to be voted on, and if approval is obtained, each of the company's stockholders of record at the close of July 1st, 2022, will receive, after the close of business on July 15th, 2022, a dividend of 19 additional shares of the same class of stock for every share held by such stockholder on the record as of the record date. So something to keep in perspective. The 20-for-1 is the deal that's on the table. So which means that essentially the stock will split into 20 equal shares for that one share that you own. So, for example, I think the stock is at what 3,000 now, so that would probably place the stock around 400 and some change. I think it's like 450 or 480, if I'm correct. 3,000 divided by 20, so that puts it at 3,000 divided by 20. Yeah, that's 150. My goal, my perspective is I think that they're probably going to do maybe a 7-for-1 stock split. I don't know if they're going to be able to fully get that 20-for-1 stock split, though that is possible. And that's probably where my target is, but I could be wrong because of the fact that it's that dual class share system, especially since they're an S&P 500 company. So I think that they'll probably agree to a 7-for-1 stock split. But, again, 20-for-1, that's a huge opportunity and opening because that now puts it into the lines and possibly allowing them to raise that valuation a lot easier to be in the same stratosphere in the likes of Microsoft, Apple, Amazon, and Tesla. So something to very much so pay attention to, along with opening it up for more buyers to buy the stock. Now, a lot of folks are also saying that this could also put pressure on companies like Amazon as well for, looking at, maybe it's time. Hey, Andy, we know that Jeff wasn't on board always, but maybe, just maybe, you might need to look into this and do the stock split. So how does the stock split, like a lot of folks that are options traders, how does the stock split affect you as your options? You're not really affected. If anything, at the same time that we see the stocks adjust, the option prices, aka the strike, will ultimately adjust themselves accordingly. And so everything across the board will adjust itself, so pretty much you don't lose value or anything like that. It's just going to adjust itself so that way the numbers reflect correctly. That's it. Enough said. All right. So nice. All in all, good quarter, solid. Pretty much across the top. They beat across the top and bottom line. Pretty much, nothing out of the extraordinary. What people wanted to see was earnings growth. They saw it. And like I said, the thing for 2022 is going to be all about earnings growth. So what does your earnings growth potential look like? If you do show strong signs of earnings growth, especially as tech companies, so they're looking for that double-digit earnings growth, then you will be rewarded. If you do not, if your guidance does not reflect that for the looking out for the full year guidance, then that could be somewhat of an issue. So something to pay attention to for companies moving forward. But one of the things that I tend to notice is that if you're seeing Alphabet doing well, then 9 times out of 10 you're probably also going to see Meta, aka Facebook, probably also knock it out of the park, because both of those two platforms represent exactly a good economic read for the advertisement spend space. Okay. Then hold up, let me come on camera real quick. I gotta hydrate.
Take your time.
And then there was AMD. Now, for those of you that don't know, I've been holding on to like AMD as it pertains to conviction for quite some time. Now, mind you, I've had to go through the process of, people doubting the company, people leaving the company for dead, people talking so much mess about the company, people talking about the company's overvalued, people talking about like, okay, hey, well, Intel will come through and eat its lunch. Intel will ultimately do this, will do that, and ultimately flex its muscle and show, hey, that it belongs back up to where it belongs. I've heard it all. But the difference between, the interesting thing about results? When you deal with results, after a while, the talking stops. And you got to show it. And today that happened. Oh, it greatly happened. And so this is what conviction does. Let's get into it, shall we? So for those of you that know me, you know that essentially that I've been straight up bullish on AMD for quite some time. And actually it's within my top 2 convictions for 2022 also this year. A pullback doesn't shake me. A correction definitely doesn't spook me. And on top of that, what any of the other pundits out there have to say just to sell advertisement dollars, or ultimately they're getting paid by competitors for marketing purposes, that clearly doesn't shake me, because after a while all that tends to get quiet, and pretty soon you gotta show what you got. And thus, here we have AMD financial summary for 2021. So, record revenue, let me just put that on the table right now. Record revenue, $16.4 billion, up 68% from 2020. Now, here's the reason why that matters. The reason why that matters is because of the fact that, one, a lot of folks had said that because of 2020 and even 2021, that essentially that, or in 2020, a lot of these companies just had nothing but a cakewalk due to quantitative easing. They didn't belong where they belong because of the fact that we don't see their revenues being there. Okay, that's a fair point. But then 2021, they said that essentially we should start seeing some of those numbers start to subside a little bit, and then essentially we should start seeing things get back to normal. Okay. So then how do we explain 68% year over year? Okay. And then how do we also explain a gross margin of 48% growth from the year prior? So here's how we can explain it. Significant growth in profitability. Operating income at 3.6 non-GAAP. Operating income 4.1 billion. Operating margin up 22%. Net income 3.2 billion. Diluted EPS 2.57. Okay. Operating cash flow, aka cash, like 3.5 billion, up 229% year over year. Record free cash flow 3.2 billion, up 314% year over year. 1 billion in strategic investments in long-term supply chain capacity. Okay, didn't have to go out there and spend $20 billion just to go out there and be in all these different facilities if you're a so-called foundry and all this other stuff. But I digress. Repurchase $1.8 billion in common stock. Okay, that's like the likes of companies like Apple and Microsoft that are ultimately out there buying back their stock. That's big muscle. Okay, and then on top of that, strong balance sheet with 3.6 billion in cash and cash equivalents and short-term investments. Now we know about some of those investments, which I'll get into, but don't worry, I'm going to slow it down a little bit. Let's go down to the quarter. So record revenue, again, 4.8 billion just in Q4 alone, up 49% year over year, 12% quarter over quarter, double digit. Gross margin, 50% year over year, and 190 basis points quarter over quarter. OpEx spending, 1.2 billion. Strong quarter. We've already gone through this. So again, record free cash flow, 736 million, up 53% year over year. Repurchased in this quarter alone, 756 million of common stock. So when you saw during Q4, when AMD was doing its thing alongside with retail investors, guess what AMD was doing? They said, yo, check me out. We're going to buy some of this stock too. Okay, so let's get a little bit into it. So where we look at the revenues, where we see that 2.6 up 32%. Okay. All right, so that came from, of course, the Ryzen and Radeon processor sales. So pretty much desktop computing and everything else. Higher average selling prices, ASP. Client processor ASP grew year over year and quarter over quarter due to richer mix of Ryzen processor sales. Okay, so let's get down to the strategic news and highlights. Strong demand for premium desktops and notebook PCs. We got that. Announced Ryzen processors with AMD 3D V-Cache. They announced that recently. Launched Zen 3 Plus for their Ryzen 6000. Wait a minute, that was a CES. That was just recent. And they're preparing for Ryzen 7000. Wait, how do you launch two different chips that are like two new cycles in the same year at the same time? Oh man. All right. You know what? Let me just digress and pull back the shade a little bit. Enterprise. Okay. Revenue, $2.2 billion. So that's letting you know that they're stepping into the market where once upon a time, they didn't even really have a strong EPYC or a strong enterprise and embedded semi-custom segment. The only thing that was their semi-custom segment was PlayStation 5 or PlayStation and Xbox. Now, well, let's get into it. What happened? Expanded internal deployments of third-gen EPYC processors, okay, into the cloud. All right, significant growth in both cloud and enterprise, including 100 third-gen EPYC platforms. So each one of those EPYC chips, if you get the chance, go ahead and Google AMD EPYC chip price, and that'll kind of like, per se, give you a perspective. And then if you want to, just for giggles, go ahead and look up Intel Xeon server chips. and see exactly how much they cost. It'll tell you something. And then, of course, they previewed fourth generation processors. This pretty much happened at CES. But then they also announced the fourth gen processors coming in the first half of 2023. So they just, again, did two different product cycles, one for this year, and they're already prepared for next year. And then, of course, game console demand continues to outpace all prior generations. Okay. Look at that revenue trend. Here was Q1 in 2020, and then look at all of 2020, but look at the growth that came forth. That's what we look for as it pertains to investors over a period of time. We like hockey sticks. We like hockey sticks when we see these bars. We don't like the other side. Then look at this gross margin trend. Now, of course, everybody looks at 46% in Q1 2020. That was around the same time as the pandemic. But look at where we are in Q4 2021. Still growing. Still growing. Earnings per share, still growing. Profitability, they're here, 77% year over year. To put it into perspective, at Q4 of 2020, they were at 52 cents. They almost went 100% year over year growth in just 1 year. And that's the breakdown. And enough said here. So let's I digress. Let me just, let me come back on screen because, I feel like we need to digress here a little bit. I feel like we need to digress here, because a lot of times, I definitely don't want anybody to get into their feelings, but let's just turn it to a chart, shall we?
Yes, I was just about to say, bring up the chart.
I think it's time that we look at a chart because I think it's time for us to have the conversation. So let's turn to the chart. So first off, I want to send a huge shout out to the folks over there at Barchart. Definitely, it's honestly pretty interesting how the world comes back full circle, because one of the first stocks that I was looking at when I started using Barchart happened to be AMD around 2014, 2015. And of course, XLK is ultimately how I also discovered. I discovered it by using the platform Barchart as well when I started charting it. One day I'll drop that just so that way it also has a timestamp in my Microsoft OneNote, which I don't really use anymore. All right, anyways, so here's the thing where it's like we talk about this thing called conviction, because for everybody else, everybody normally looks at the chart and they typically see it like this, or they see it like this. Like they imagine the market by just looking at it over the span of a 1 day or 5 day. But meanwhile, while everybody's looking at it from a 1 day all the way out to a 6 month chart, I'm out here looking at it from a 1 year, 2 year, 3 year, and 5 year chart. Like for me, I look at that in the sense, and even sometimes even getting a little bit bolder and saying, looking at it from a 10 year basis. But let's bring it back full circle. And we're going to look at it from a 3 year basis, because we're now in 2022. This takes us all the way back to 2019. And Jolene, you understand these years of 2019. The company was just getting started long before the pandemic came around. So for everybody to sit back and say that, oh, well, AMD flourished because of the pandemic. No, they were on their way. They just happened to be very much so prepared. And then, of course, we saw the market drop, and still everything's gravy. And then, of course, rapid expansion and growth. Now, if I run a comparison as it pertains to a chart and look up a symbol, yeah, let's look at that. I think it's time that we have that conversation, because then when I look at it in comparison, I see a drop here. I see a convergence between companies. I see that essentially that once upon a time, the top dog ultimately no longer was able to keep up, and ultimately it started to run up with the rest of the market, of course, in 2021. But during 2020, it kind of like just underperformed the entire time, if we're just keeping it a buck. But here's the interesting part. When everybody gets, nervous and everything else, like if you think about it, those AMD calls last year, remember this time? Yeah, I just want to let it be known. This is around the time that people had me messed up. But ultimately, that unwavering conviction is ultimately what carried me throughout the entire time. And of course, you could say, okay, hey, Mark, there was a ton of different factors, but the data still remains. The data still remains the same. AMD is here. If you want to look at a comparison, if you want to look at competition, then go ahead and compare side by side in notes between, not the chart, because this only just tells you at the time being of what's going on. This only just reflects exactly what the sentiment is for the time being for that particular day or that point in time. What matters is, let's go back and look at the report cards. Let's go really see who's the A student and ultimately who's now the C student, just doing barely enough to get by. Or now all of a sudden found Jesus and ultimately wants to start being a company all over again. These things really matter. I yield my time for the time being.
Let's take a hold on, my light's messing up. Let's take a moment, because what does it take, Mark, to have that level of conviction, and block out all noise and continue forth with your thesis and just be patient?
Data.
Especially as a new trader,
Data.
But so data is key.
Yep.
And when you're a new trader, and you're new and you are just learning about this market, what are some key things you can do besides, because sometimes data can seem big when you are starting out.
Yep.
So what are those entryway pieces that you can do to develop your conviction?
I'll give you an example. And I was saying it on Twitter Spaces earlier today, so for those in whom wish that were not on Twitter Spaces, don't worry, you're about to get the refresher. I had this example between Amazon and Walmart. Now, of course, Walmart is the bigger retailer, and Amazon is probably considered maybe the second largest e-commerce or electronic retailer that we know of. But then there's some things here, right? Because now we start to look at it, okay, hey, two different ways, that's the bar, and if you look at just that one specific bar, then you would say, oh, Walmart hands down all day, every day. But then what is Walmart looking to do for the future? What is their future goals? Well, Walmart's trying to become a tech company. What is Amazon? Amazon started as a tech company.
Mm-hmm.
So now you got a company that's the largest retailer trying to all of a sudden become trying to become a tech company, and the tech company is ultimately trying to add a vertical integration in expanding and growing its retail. Who do you think wins? It's like you can measure it across the entire board. You can look at it from the perspective of, okay, hey, AMD and Intel. All right, well, if we're going to really make the argument for AMD and Intel, or if we want to do it for any other company, but AMD and Intel seems pretty right, because there was a ton of Intel folks once upon a time that used to just dog AMD as a company. They used to be in all the gamer blogs and everything else in the forums, just literally just talking reckless about Intel chips or about AMD chips. So now it's time for AMD to have its moment in the sun. So let's have it. So if we really put it into perspective, Intel, literally is supposed to be one of the leading companies within the space of autonomy, self-driving, Mobileye technology. I'm sorry. When's the last time you heard about Intel's Mobileye technology? Who's using it? When is it actually coming out? Are they going to go public? What's going on? We haven't heard anything. We've heard about GM Cruise because the GM marketing machine, they have no problem talking about it. When we hear about NVIDIA, we've seen what they did, because ultimately you wouldn't have had Tesla Autopilot and Enhanced Autopilot without NVIDIA. So we know what NVIDIA does, but that's not AMD's space. So then let's look at it from the standpoint of AMD focused on providing the best amount of product at a decent, solid price with solid price margins for its customers. Intel, on the other hand, said, you know what? We're a little bit above that. We're a little bit more upper echelon. We're going to go for the top line customer and let them pay the top price. And ultimately, our margins are good there because we're very well insulated because nobody's going to come up here to challenge us. But what happens? And this is why I always say that economics matter. Because when things get tight and you got to start adjusting your price, you got to start adjusting your price points. You got to start coming out with products in which that also allow you to bring it down, but also keep those price margins high. Now you're in trouble. And then, of course, the company's been known to do that since day one, but they just didn't have some of the good fundamentals down packed. Then all of a sudden, they start taking your lunch. See, it's like the company that is once upon a time the high profile, high expensive, only for enterprise, but yet at the same token, we charge enterprise level pricing for our retail customers. Now we got to bring ourselves down to affordability. But meanwhile, the affordable company, it does the same thing, except that they scaled it up the right way. And then we wonder, why is it essentially that we've seen this crossover between companies when we talk about leadership? You know, one chose to become, and think about it. I'm not even giving you I'm not even going into the granular details. I'm just keeping it a buck with you, just like as if we were talking about anything else on the streets. Mm-hmm. We're literally saying, okay, hey, well, you know, once upon a time you were too rich for us. Remember, you were too good for us. Now all of a sudden you think that essentially that you can just walk back up in here and just say that we're good. You played well with the OEM retailers. You played well with Microsoft, but yet at the same token, the streets didn't agree with Microsoft. The streets didn't agree with the OEM retailers. The streets wanted something that was more affordable, and they got it. And then now all of a sudden, they figured out how to scale it. And now that they figured out how to scale it, now they're taking what they did that you never could do, which was being in the custom semi-chip space, which was ultimately just in consoles, which everybody laughed at once upon a time, saying that's all you got. Now that one thing that you had is now the place where everybody wants to be, and now essentially they're starting to take your lunch. See, again, it's like, it's about the story. It's about the story, and the data validates the story. You can go back and check the tech. You can go back and check the ticker. You can go back and check the earnings. The earnings will tell you the truth. You know, it's like many times we look at, say, for example, like a lot of folks looked at Amazon for its valuation. And I know that TiVo wrote that in the chat where he's like, a bookstore isn't a company. But there was a lot of tech that Amazon had to build in order to be an online bookstore. That's the part. They grew with the times and built off of the infrastructure across multiple iterations from just being a mobile, or just from being an e-commerce platform. From being an e-commerce platform, they scaled out and they acquired more technology, which allowed them to scale. That's the point. Like, Walmart started off as just purely brick and mortar. There's no tech behind that. And now all of a sudden they're bringing in tech. When we think about the companies that are sitting out there in front of you, think about what is it. Here's the simplest way. Think about what it is that they do. And then think about also, from what they do, where is it that they're trying to go? And when you think about their competitors, where are their competitors currently at, and where are they trying to go? It's like, it's the company that's trying to go into the space of the company that typically is already there, but yet the company that's already there, that's already looking to scale into something else, 9 times out of 10, that company wins.
So what I hear you saying is, start with the story and then see if the data validates the story, and then look at earnings, so you can ascertain whether the truth is being told.
Correct. So, as traders, though, right? Sometimes you need a cheat sheet. Like, you know, sometimes, have you ever been in a class where it's just like, yo, for real? This lecture and everything else that has been given, this person's about to give so many questions on this test that he didn't even go through in his lecture. And then they sometimes throw you that olive branch where they say, okay, hey, you know, here are all the things that you should study for the things that are going to be on the exam. I think that we should go through that today. Don't you think, Jolene?
I do. This is one of my favorite things on Barchart.
Well, all right. So give me 1 second here. And let's transition. So this is actually one of my favorite things also when it comes to bar chart. You know, the reason why I like it so much is because of the fact that, you know, honestly, you know, there's so much value here that's being provided when we think about, you know, this trader's cheat sheet that a lot of folks overlook. Like, for example, here is just a simple thing, like just if you think about getting started, it starts off with zero complexity. Where you see a stock, we're gonna take AMD, of course, because we still sipping. We have the high, low, and previous close, and last price. This is pretty cool because, especially if you're just getting started, it kind of like shows you some things, like how high did the stock go, how low did the stock go, where did we close in comparison to where did we close from yesterday. I'm gonna walk you through it. So then we're going to go to, again, those high lows. So in comparison to the high lows of today and close, well, how high were we a month ago? How low were we a month ago? You know, 13 weeks. And then, of course, what was our all-time, quote-unquote, 52-week high? What was our 52-week low? It puts it into perspective as it pertains to where have you been. Okay. Then we start getting into the more technical stuff, right? Like, for example, moving averages. So it tells us, based upon price, okay, well, we came all the way down here and we're at this wonderful MACD, the 31016 at 99.54, which pretty much was saying that, okay, hey, we're stalling out. We crossed over the 9-day moving average, which placed us at 112 bucks a share. And then, of course, we came to 115 on a MACD oscillator that stalled us again at 115.91. And then we had this big old boost at the end that closed us. Now, of course, you have all these wonderful things up here, which we're probably going to go to challenge over a period of time that brings us back up to those 52-week high levels. So we respect those things. But let's remove that out of the way. Let's remove some of the complexities out of the way. And then let's go to what we call RSI. So the beautiful things is these are the support and resistance levels on this side. And then these are the key turning points. So support and resistance levels tells us exactly where is it that we find support, at what price, along with where is it that we get rejected at. And then, of course, here, this tells us over here that this is where a turning point could essentially take place within the stock, aka 14-day RSI is at 50% at 126 bucks a share. We currently close at 116.78. All right. So now that we got that at the RSI, let's go to pivot points. So when we look at pivot points can be led not only on a resistance level, but also on a support level, which lets us know this is where we bounce off of, or this is where we land. And so looking at this, we see that there's a ton of resistance that's been kind of bunched together. Now, here's a little cheat code for folks and whom we're set need a little bit of perspective. When you typically see that essentially that these pivot point resistance levels, resistance points are very closely, especially for stocks that tend to move, you tend to see that we pretty much blast past these. So don't be surprised when you see companies that blast past these three levels of resistance, that essentially that they're on the verge of a breakout. So again, another thing to look at is we have a pivot point here that just sits as not as a support, not as a resistance, but just a pure pivot point. Here's the thing about closing above a pivot point. If you close above a pivot point, that lets you know that essentially that it's a bullish sign. If you close below it, then that can ultimately signal a bearish sign. Okay, now that we got that, let's add in our friends, the stochastics. Now, a lot of folks look at stochastic and be like, okay, well, what does this mean? So pretty much it measures the momentum of price movements. The idea behind the stochastic is that momentum of the price will often change before the price movement of the actual, stock actually changes direction. So as a result, the indicator can be used to predict trend reversals. So which means that essentially that the stochastics say that there's an 80% probability over a specific period of time, raw, that essentially that we will reach $132 a share. Now it's very possible, very possible, that essentially that we could be on the verge of seeing that. Now, if you went back and looked at things during correction, the stochastics ultimately had turned from being bearish to being bullish, and ultimately look at the percentage changes to the downside. So it says that there's a 30% probability, 20% probability, and ultimately we start to stall out. Now, of course, we can't leave out Fibonacci. Now, a lot of times people look at the Fibonacci and it's like, okay, hey, well, it's really a number sequence if you really think about it. Like, really, if you can really start to put together the number sequence, it all starts to make sense. Like, for example, if you take 21 and divide it by 34, it equals 0.61. And if you think about that, then essentially therein you'll find that 0.61 on a Fibonacci channel. And if you take 55 and divide it by, say, for example, an 89, that also puts you at a 0.61. The ratio there gives you a 38.2% ratio. Is discovered by dividing a number in the series by the number located 2 spots to the right. So again, if you look at it, here we find ourselves at 124 as it pertains to the 38.2. And notice how the 38.2 is a lot closer to the 125. Typically another gem when we find those things happen, then essentially, again, sometimes they can also signal that essentially that the trend has been reversed, and also that we could be on the verge of not very much room for essentially having very much stalling out here, but ultimately taking us to a breakout point. And that's ultimately, once you start putting it all together, that's ultimately how you start to see the trader's cheat sheet. And a good legend here is blue areas below the price will tend to provide support to limit the downward move. Red areas above the last price will tend to provide resistance to limit the upward move. Pretty much, one's bullish, one's bearish, as it pertains to the trend, and also letting you know exactly where the support lies or where the resistance lies. Again, nothing has really changed here because, again, it's all led by support and resistance and turning points.
Mark, I think that using the cheat sheet in alongside the chart is really helpful when you're first approaching technical analysis, because it pretty much lays out what the trends are, and then it helps you to see that on the actual chart. For me personally, it's easier to look at the cheat sheet first and then see how it matches
compared
up
to
with
the
chart.
A lot of traders actually do that because then it lets you, like, especially when you're first beginning in technical analysis, it helps you kind of like start to figure it out, like as you understand and learn the concepts of technical analysis. And then when you get accustomed to seeing it, then essentially sooner or later, when you start comparing and cross-referencing it to the chart that you're looking at, sooner or later you'll start looking more so at the chart and being able to spot these things, and then just have them placed as indicators on your chart.
Yeah, I like it. So we had a few questions, Mark, in our last 10 minutes. Many of these questions were already answered, so that's great. A lot of questions about Google. So we have some questions about retesting, and maybe you can use the cheat sheet or so or the chart to answer that. You know, how do you know, or how do you identify whether there's going to be a retest or whether a correction low has been retested or not?
So remember when we went through that period and process of looking at the Elliott wave charts, where it shows you the, you know, wave 1, 2, 3, 4, 5, and then A, B, C. A lot of times it cuts off and it doesn't show you level D. So again, if we go and look at, let's see if I can pull up the chart here on my end. And let's see. And I'll put it in line format. A lot of times people like to look at it from, say, for example, a candlestick, which is, no knock towards folks who use candles at all. But sometimes it's actually good to use a simple line chart. And the reason why is because when we look at it over a period of time, you have the 1, 2, 3, 4, 5. Wave 5 was where we peaked out. And then essentially A, B, C, heading up to D. But, there's a possibility that we'll probably get rejected at 131 and then come back down to a level E. And then essentially that's pretty much a retest level, where a retest level is just to essentially gather up any leftover buyers that may have been left behind, or essentially just letting the stock ultimately find balance. Because really, if you think about it, the market is just a summation of buyers and sellers. And are the buyers willing to essentially agree at the price levels in which that they're paying for? Well, I wouldn't be surprised after we see AMD's earnings. I would not be surprised, especially analysts now go back and relook at the data, which is going to be a major point alongside some of the economical pieces. I would not be surprised if we see that price targets start to rise for AMD based upon them raising a full year's guidance. So they raised full year guidance into double-digit growth. And so now analysts are going to have to go back and essentially adjust and ask, okay, hey, well, where does this place us? Where is this? What does the business look like? What does the potential revenue growth look like? With that being said, during that period of time where you start seeing that analysts start to chew on the data, that's typically a retest period while the market waits.
Okay. So, okay, with using the cheat sheet then, and we were talking about conviction earlier, how would you go about building your case for conviction using either the cheat sheet or the chart? Do you do that, or is it more fundamentals?
So yeah, I mean, you're not going to really fully just build your conviction off of a chart. I mean, you can build a conviction as it pertains to what you see when you're trading it on a short-term basis, and especially if you're able to spot patterns. But nothing on this chart really tells me, if I'm just looking at it, if I'm a novice person that's just looking at the chart, I see that, okay, hey, that the stock has had a heavy-duty sell-off, and ultimately it's just starting back on the incline. I still have to wait and see here, especially looking at this long wick that we just saw. Now, for all intents and purposes, essentially looking at this chart, I need some color here. I need some color that ultimately tells me a little bit more to the story. And that's where really the fundamentals come into play. The cheat sheet only just gives you a perspective it really fills in the story when we think about it from the perspective of what has happened, what is taking place, and also what's the probability of moving forward. So for example, if we see an 80% probability, there's an 80% probability that we will touch 132, but yet at the same token, there's still that 20% that essentially we could still be at the downside at a 20% probability that we can be at 107. And again, that's where it only just gives you the filler of being able to spot potential entries, potential exits, and essentially a range also of where the stock could potentially trade.
Okay, perfect. We have some questions about some things that happened. Let me see. Here's a question. We're kind of switching gears for the last 4 minutes. When is Visa and MasterCard getting pulled out of XLK, and how will that be replaced?
I would literally consult with your local State Street and wait for any potential press releases. that they plan to essentially release. Of course, it's chatter, but yet, I mean, I think that it's going to happen. So I would just wait to see exactly what kind of guidance do they give from their company. Maybe even have they mentioned it during their earnings report of any potential shakeups within their index-related funds.
Okay. Let me see. I think we have time for one more question. Let me scroll through these. All right. So let me see. Here's a question about retesting, since we're talking about technical analysis.
Mm-hmm.
At what point do you think the SPY, Apple, Microsoft, or SMH will retest?
I think that there's a strong possibility that these companies will retest around the same time that they get a little bit more color from the Fed when it comes to the first rate hike, or if not before.
All righty. Hold on. Do you have any announcements?
Do I have any announcements?
Yeah. Do you have any announcements?
Do I have any announcements?
Yeah. Do you?
I don't know. Do I?
I'm asking.
Not that I know of. I must be having a moment right now.
No, you're not having a moment. I was just asking if you had any announcements because we have 2 minutes.
I will say this though. Around the time that we receive some color from the Fed, I can tell everybody when you can expect to see the next come up series pick list. When we know with what the Fed is going to do, we will drop the come up series pick list. And the reason why is because there's multiple different pick lists that we've put together that essentially speak towards different economic cycles or different economic situations. So depending on how those combinations play out, you'll see the release of the new pick list.
All right, so it's still coming in Q1 then.
Indeed. No matter what, it's coming. And it's gonna, I will say this, it will probably be a little bit more refined.
Ooh, okay. We have supplemental Sundays.
Yes,
this
we do.
Sunday. So that is at 5 p.m. Pacific time and 8 p.m. Eastern Standard Time. Be sure to tune in for that. I don't know what the topic is yet, so I'm sure Tivo and AJ will share what that is. But be sure to tune in to that on Sunday. I will remind y'all again on Thursday. We have more Black History coming up. And I think that is, do I have any other announcements? I don't think so. I think if I do, I'll share on Thursday if I do.
I guess the only thing I will say is be on the lookout because there could be a potential partnership brewing also at the same time. If it wasn't
y'all.
If it wasn't that obvious, if it's not that obvious.
It's time. It's 6:30.
Okay.
6:30.
Y'all, thank you so much for watching tonight's show. Like I said, if you like tonight's episode, go ahead and smash that like button and go ahead and hit the bell so that way you can be ready for the next one. And on top of that, if you haven't subscribed yet, you should go ahead and do that because we do this a lot. Just drop gems just for the heck of it because we like y'all. Keep learning, keep researching because the more you learn, the more you earn. Until next time, I am Mark Monroe.
And I'm jolyngc in the place to be.
And this has been your come up. We'll see y'all on Thursday. Peace, y'all.